I want to thank all the pastors and the ministers in the house. My appreciation goes to the pastorate for the privilege. Well, because of our time, I will try and summarize what I've earlier sent to the church. The topic before me this morning is on tax reforms and its implications. Some few days ago, the president was in the National Assembly to present the 2026 budget. And our budget for 2026 is about 58 trillion. And in that budget, at least I was able to extract that we have internally, we have to fund that budget to the tune of 34 trillion. By implication, the balance is likely to be maybe loan. My emphasis, therefore, is on the 34 trillion. The 34 trillion will be addressed by tax and non-tax receipts or revenue. And up to 2024, I'm able to say this, that even before 2024, our tax to GDP was less than 10%. And I think sometimes around 2024, it rose to 13.5. But the target of this administration for 2026 is to be at 18%. Now, I want to look at this, the reforms in 3 steps. Why the reforms? Why? The second stage will be, what are the tools that we have put in place to achieve the targets or the objectives? And lastly, we look at the implications of this tax on individuals, corporate entities, as well as the nation. So please, I want you to go to, I think, page 3 or so. Yeah, this one is not. To page 3. Page 3. Go on, please. Go on. Okay. Now, one of the aim of the tax reform is to increase revenue and drive economic growth. As I've said, based on the little analogy that I've made, the intention of this administration is to increase revenue and to drive economic growth. Economic growth is dependent on the gross domestic product and by extension, by per capita income. Rostow theory, for some of the economists that are here, we know that for a country to grow, the per capita income must also increase, which is your national income perhaps divided by your population. And to have development, therefore, that growth must be consistent and as well as sustained. That is one. Number 2, is to bring more people into the tax net. Bring more people into the tax net, because we realize that there are very few taxpayers on the tax net as we speak today. But with the number 3 on this, the improved business environment and providing allowances and reliefs, which we are going to discuss. There have been so many reliefs and allowances, which we believe that will bring in more people into the tax net. However, one of the aim too is to reduce tax avoidance and evasion. Because with these relief and allowances, we strongly believe that there will be a reduction in the tax avoidance and evasion. Baby, please permit me to just differentiate between the two, avoidance and evasion. Avoidance in law is not illegal, but evasion is illegal. By avoidance, we can make use of some lapses, perhaps, maybe in the law, to address some tax issues. Maybe by the time we are, I don't know if there's going to be opportunity for for question and answer, then we'll look at a way where you can use tax avoidance, in law, in the tax environment. And lastly, on this is to enhance effective tax administration across the different levels of government. Let me state this too. Tax administration. Before now, we have some stages. For those that run businesses here, there's what we call desk review. We have auditors coming to your office to check your books. We have enforcement, tribunal, and on and on. But with the new tax reform, there is a space for us. We call it tax omnibus. Tax omnibus is just an avenue for us, the taxpayers, and the revenue or the service, to re-review various assessments that has been given to the taxpayers. At that point, we can resolve the issue before taking it up to tribunal. Some few days ago, there's one, I don't need to mention the name. It's one of these activists, that raised the issue. He quoted a section of our tax law, the new tax law, that where and when a taxpayer failed to pay within a reasonable time, I think 14 days, that the government will take possession of the assets of that company. We as Christians, I don't think we need to get to that level before we do the needful. The implication there, therefore, is that we see some of these taxpayers, I know they are not here, that money deducted to be remitted to federal government are used as working capital. It is very, very common. VAT is an invoice-based transaction, and it should be treated as such. It's money that belongs to the government and not you. Withholding tax that you have deducted meant for the vendors. Some will deduct and keep in their covers for working capital. These are issues that can lead to that thing that I've just said now. Because at that point, perhaps you must have used the money for other things, and you won't have, because you have that the resources to pay your assessed liability. And as such, the government doesn't have other means but to take over your property. So let's move on, please. Now, to achieve the whys, the aims, and the objective. These are some of the tools that the government has put in place. Number one, effective from 1st of January 2026, the Nigerian Tax Act of 2025 will kickstart. And I'm going to really spend more time on that number one, because that is what we call the act. All taxes fall within this particular heading, be it personal income tax, company income tax, capital gain tax, stamp duties, the rules on residency and non-residency taxpayers, they all fall under that tax. We are going to discuss at length. Now, we now have Nigerian Revenue Service Act or bill. Before now, we have Federal Inland Revenue Service. So it has been changed to this. The implication that the framework policies of FRS, in fact, it has changed. I will not say it will be changed in 2026, because effective September this year, they have started working seriously on the implementation of this bill. And the other one is, okay, the Nigeria Tax Administration, yes, I've explained that. And then we now have the Joint Revenue Board. The Joint Revenue Board before now is joint, what do you call it then? I've forgotten, but that is the name now, Joint Revenue Board. Now, the advantage of this Joint Revenue Board, before now, your tax clearance, if perhaps you live in Lagos, cannot be used in Osun. Should in case you now perhaps decide to get a property in Osun, before your property or the documentation is complete, they will request for your tax clearance. So if you buy land in Osun, the implication is you must go and get a tax clearance in Osun. You have Lagos, you have Osun. This one has been harmonized today. I know that you have been hearing the word tax identification number. The tax identification number is the one that will play this role. And thank God for the government, they have limited it to our NIN. So our NIN is our tax identification number. So it is our social security number. Don't let me say, but I know that we are moving into a position where we are going to have just one identity. The BVN perhaps may fade away in future, but as we speak today, your NIN as well as your BVN is key to government. Now, so having said this, please let's move to the next bit because of our time. So I've got. Okay. Now, as I've said, under the Nigerian tax, the NTA, that is the Nigerian Tax Act, we have company income tax, which is very, very important, especially for those that has a limited liability company. Now, before now, profit from cryptocurrency, betting, lottery, gaming, and digital, well, they are all digital transactions anyway. You know, very difficult for government to really, extract the profits. But as we speak today, because of the tax identification number and the BVN, which really shows that there is no hiding place for anyone anymore. So they can track your transactions from those. The beauty of the tax law for the companies, therefore, there is not going to be minimum tax anymore. Before now, Even if you make loss, you pay a minimum tax. But today, once you made a loss and you are able to justify and substantiate it, you are not going to pay tax at all. Now, we have what we call development levy. According to that section, all other taxes, education tax, NITDA, police fund, and on, they have all been harmonized to one, which is called the development levy, and is at 4% of the assessable profit. Now, there is a difference between accounting profit and assessable profit. Accounting profit is mainly for management and for business use. But assessable profit is what the tax used. But for, no, don't let us really go into that because it's a process. But they are not the same anyway, all because of some allowable and not allowable expenses. Now, the 30% is also on your taxable profit, according to. Now, your turnover. Once your turnover for the year is less than 100 million, and the asset of that company is equally less than 250 million, you are not going to pay tax, even if you make profit. 2 months ago, I had a discussion or a presentation here. If you have that material, the turnover there was 50 million, right? Today, I'm saying 100, and I'll give you the reason. There is an issue now, and which I strongly believe, because when this tax law was concluded at the National Assembly, between National Assembly and to the presidency, they tamper with it. And some, let me use the word, yes, thank God for critics, they've really delved into that law, and they are using it against the government now. But one thing I can assure the House is that regardless of what happened, January 2026, 1st of January is sacrosanct. It cannot change. And number two is that for all the errors, mistakes that is stated in that document will be addressed and it will be re-gazetted. Now, I'm not, please, yes. So, and then the filing of the account, especially for those that have accounts as that the year end is December, it is, we advise you to always ensure that you file on or latest by June. And donation, yeah, this is another area that we need to really work on. Donation. If you have an expense line donation, it must not be 10% of your accessible profit. It must not be more than 10% of your accessible profit, as stated in the fifth schedule. Research and development too is capped at 5% of turnover. So this also has been reduced from 10% of profit to turnover. And assessment is on preceding year basis. Your income for 2025 will be assessed in 2026. So we can move on, please. Value added tax act. This is also another thing that we need to look at. As I've said, it still remains 7.5%, and it is an invoice-based transaction. So once you raise your invoice and you put your 7% fee on it, that money is government money. It's not your money. So you remit it as at when due. But we now have so many lists of items that are exempted from VAT. For those that run schools now, the tuition fee that you received, no VAT on it anymore. No, and your profit that you make as a school is not subjected to tax anymore. Now, other items, medical equipment, pharmaceutical, agricultural product, and all, yes, they are all tax exempt. In summary, food, accommodation, and transport, they are all free from VAT. Now, let's move on because of our time. Okay, personal income tax, yes. I think we are going to spend a little time on this. The law of residency, for some of us that lives in Ogun and work in Lagos, ordinarily our tax will have been to Ogun State and not to Lagos State. I think the government is working on that. That is what the summary of the Residency Act is talking about. Now, the taxable income. Now, let me divide this into three. We have salary earners. We have people that has companies, enterprises, ventures, that the word limited is not there. So they all fall under this stage, personal income tax. So, and thirdly, we have some people that we classify as high net worth individuals. High net worth individuals. You know what I mean by that? So they all fall under this. The process of assessing them is the same. Of assessing a payee holder or someone that runs a company, not limited, and also the net worth individual. The net worth individuals include the MDs of companies, the directors of companies, and, all these politicians, they all fall under that category. Now, we now have some reliefs for all these categories that I've mentioned. So with the new tax law, we have relief on rent. If you pay rent and you're able to substantiate, produce a receipt that you have actually paid rent, if your rent that you paid, assuming, is 1 million, 20% of 1 million is how much? That's 200,000. So, but you have a cap of what can be allowed, 500,000. So, in other words, for 200, it will be 200. But if it is more than that, assuming it is 800, right? The 20% of a figure, assuming if it is 800, it will be restricted to 500,000. So once we calculate your payee, so they will deduct that one first before they now charge based on the table that I'm going to show. Other things that are other reliefs include: one, pension is a relief. National Housing Fund. If you sign on with, if you have National Housing Fund, then you have National Health Insurance Scheme. It's also a relief that can be claimed. That is if you have document for it. So life insurance policy too is also another relief. For life insurance, the premium that you pay on yearly basis, you must provide the evidence of the premium that you pay for your life insurance policy, and that one is 100%. So sometimes, assuming your chargeable income at the end is 1 million, and your premium is 1 million, so the implication is you are not paying tax. So because it's a relief. So let's move on. Okay. Now, this is another area that will also interest you, capital gain tax, is also subject to personal income rate between 0 to 25. I'm going to show you. Before now, any gain on asset disposed, you charge 10% flat. But as we have it today, it's not 10% flat anymore. We have a rate from 0 to 25. Now, gain from sale of private residence or residences are exempted from capital gain tax. Only sale of a property, residential property, is exempted from tax. Loss of employment compensation is also exempted. Formerly it was 10 million and now 50 million. So if your employer pays you 50 million today as a result of loss of employment, 50 million, you are not going to pay tax on it. Before, it was 100 million. Now for the informal sector, the bricklayers, the taxi drivers, and all the rest, they are all under informal sector. For that, for those ones, the law has not really captured, but they have given a kind of a blanket approval to the Minister of Finance. So we are waiting for Minister of Finance to give us the process and things that we need to watch for the purpose of that. We can go on, please. We'll soon. Now, the rate. So when we look at this rate now, rates as we speak today, 2025, and the rate effective 1st of January 2026. Assuming you have your chargeable profit, either profit or your tax is 1 million. After taking all this relief, 1 million. So to now determine what your tax will be, so you subject that tax to this table. Now the first out of that 1 million, you take 300. 300 at 7%. The second 300 at 11%. So you are now have, okay, that's 6. So the last one will be 400 at 15%. Old rate. Now, compare this with what we have, or what we are going to, or that will take effect from 2026. That 1 million, the first 800,000 on that 1 million is zero. In other words, you are not paying tax. So you have only 200. So the 200 will be subjected to the second line, which is 15%. So for someone that earns that, you only pay 200 at 15%. How much is that one? I don't know. So that is the logic. So you could see that there has been, in fact, a more relief. And for me, personally, I believe that, in my own opinion, the tax law that we have, or that will take effect from next year, is a good one. What we need to now do as taxpayer, as individual, as corporate entity, and the nation. For individual, is very important, please. Always plan your tax very well. When you do a transaction, look at that transaction very well. Is there any tax element in it? If there is, you can create what we call a sinking fund. Just put that money there. Should, in case, by the end of the year, if there is any liability, you have, at least you have something to fall back and pay your liability. So planning, strategic positioning is very, very important. And secondly, we should try as much as possible to keep records. For our mothers, I know you always have notebook, right? So always write whatever things you are doing. Write it in black and white. Don't put it on your head. Write it on black and white, so that when they check your position from your statements, right? That is from the account. Money transfer from Mr. A to Mrs. B is a transfer from husband to wife. Is it an income? No. Because to Mrs. that collected that money, Mrs. must be able to justify. Maybe perhaps she used it to buy some things for the house. So it's not going to it's not going to be subjected to tax. But money given to a mechanic, Azumi, to buy parts for you and to service your car. So the money has left your own account into that mechanic's account. So mechanic must be able to ensure that he has all the receipts, should in case the tax people comes after him. The summary of it all, one thing that I omitted under that VAT thing is that before now, we have what we call VAT output and VAT input and modified VAT. Modified VAT is just when you deduct the input from the output. The input is when when you sell an item, you add VAT to it. It's an input. When you buy things from outside, perhaps maybe for those that manufactured, when you buy, it's an input. So what you pay to government is the net of these two. So it's not, if assuming your output is 100 and your input is 70, what you pay to government is 30, not 100. For those that runs that sell recharge cards, you talk of volumes, because when you look at the accounts, it runs into millions. But what did they actually earn? So what they earn, and that's what they need to keep records too, because what they earn is what will be taxed. In other words, they will be treated like as an agent. They are agents, so they are not real companies as it were. So these are things that we just need to take note. Let me see, is there any other thing after this? Okay, just the keynote, the key takes away. So I think I've said some of these things. So we can move on. Yes. Fusi Fue, soft charge. Yeah, sometimes they wanted to introduce this, but for now is suspended. Then there's Lagos State, because I know, and I decided to put this thing here because Lagos they carry last, and the moment Lagos State is able to go with this, you realize that other states too will follow up. Now they have numerous taxes in Lagos for those that live in Lagos and do business in Lagos. But what they are now looking at is to harmonize all these taxes and levies into 9. So it's still a proposal, So from there, they say, they want to have income tax stamped, property tax, road tax and haulage levy, television, economic development levy. I think we have been paying that. So harmonized levy, users charge, and daily ticketing. So the details of this, I will get it and send it to our platform for you to see the deal. Okay, so I think on this note, I want to thank you.
Thank you very much, sir, for that very beautiful presentation. We believe that we have people who will have questions. I'm very certain of that. So if you have questions based on the things that he has shared with us, we are going to be able to take just 3 questions. Just 3. Okay, I see the first hand. That uncle, he played smart. So he raised his hand before I even finished speaking. I see him, I see you, sir. We have 2 hands. Okay, I see grandma's hand, and we have the 3 people will be taking their questions. So we are starting from this side. Please give him the mic. Thank you.
Thank you very much, sir, for the lecture. We are highly blessed and honored to have this lecture. But I have a very few questions here. Number one, I want to ask that in Nigeria, it seems we are double taxing. How do we stop this double taxing? Like, take for instance, a contract was awarded to me, to someone, but not directly, was sublet. It's not the contractor himself, was sublet. He's also going to pay tax because the money is going into his own account, his company's account. And this is part of where we have double taxing. I want us to really address that. That is number one. Number two is that all these lectures, in fact, when you get to a stage, sir, how do we avoid not being taxed on even our phone that we use? Are we not going to, when we are going to be taxed for our television, we are going to be taxed for our properties, we are going to be taxed for this, we are going to be taxed for that? What's our benefit? What are we going to enjoy? There's no good road, there's no electricity, there is no amenities, there is nothing the government is doing for us. All these taxes, what is it going to be used for? Is it not still going to be embezzled as usual? Then the last question
Thank you, sir.
our-
I'm so sorry. I'm so sorry. We're actually supposed to take one question per person. So if you alone are asking about 3 questions, you are indirectly robbing every other person of their questions. So we are going to take the response to those 2 questions. Please go ahead, sir.
Okay. Well, the first one, to avoid double taxation. Well, let me give you an example. Like in our own firm, it's an audit firm, and we have partnership with those that develop softwares, accounting packages. There's a contract that we got, as auditor, but mainly for something it's an IT thing. Now, when the company, in fact, before they paid, we had to write to FRS as we speak today that, okay, this is our transaction. Because we know that once the withholding tax, especially, the company will deduct withholding tax in our name, not in the name of the company, that is the software provider. So we'll write to them explaining the relationship so that by the time we get our receipt, so a copy of that receipt too will be given to the other vendor, that is the IT. And peradventure, if they now have a tax liability to settle, they can now use a fraction of what we have given to them to defray their tax liability. That is it. So to avoid double tax. So it's not really double tax. It's just that we don't really understand the way this thing works. Number 2, on the issue of the amenities, that the usage of these taxes, I cannot really speak for government here because it's something that affects all of us. But I strongly believe that we've been talking of transparency and accountability. And if I wouldn't know, some weeks ago, when the APC had their NEC meeting, Tinubu, the president, was really addressing the governors. For me, the president has tried to ensure that all these things get to the root, that is to the local government. The subsidies that they claim that they removed, for the past 4 months now, during FAC meetings, and in fact it's on records too, except for the last month, that only 1.9 trillion was shared among all the tiers of government. It has been 2 trillion and above. So where is this money? So our governors, in fact, those are the people for now that we really need to squeeze. But if the president is able to do what he said, just truly, let the allocations of the local government go to local government directly, as against going through the states. And we know the fears of all these governors. That is the thing. Now they want to pocket all the local government chairmen in their this thing. But the moment these local government chairmen have they have hold of their own income, it's the governor that will run after them. And that is what democracy is all about. And that's what we are trying to. And I pray that this thing will work. Thank you.
Thank you very much, sir. Can we give him a round of applause for the response he gave? Okay, we can take a question now, sir.
Two questions, but I'll mix it together. Number one, they asked me
Sorry,
that-
we cannot really hear you so clearly. So can you
Okay.
be a bit
I
more
have two
audible?
questions,
Two questions.
but I'll mix it together. In
Please.
the aspect that maybe I went to bank and collected loan to work. You understand?
Sir,
And
please
already-
hold on. We want to have your microphone changed so that everyone can hear your question.
Okay. So I went to bank and collected loan. For security purpose, I'll just branch. I went to bank to collect loan to work for government. So after paying the money, they have already removed tax on the money. So they have told me that even if I leave the money on January, Tinubu too will remove his own tax. What are the steps to take? Because if I let the money in the bank, they will still remove tax. And the tax have been removed already. What am I going to do?
Excuse me, sir. Did you get the question?
Yeah,
Or
I
should
got-
we go
yes,
over it
yes,
again?
yes, okay.
Please go ahead, sir.
Well, the first question is you took a loan from a bank. A loan should not really attract any tax. That is the thing. Yes, you pay interest on loan, not tax. Now, the profit perhaps may be realized as a result of taking that loan. Yes, the profit will be subjected to tax. That one, there's no doubt about that. And 2025 to 2026, the moment you have your assessment and you have paid your tax liability for 2025, so you have an evidence. So that nobody can come again and say, look, Oga, come and pay tax again in 2026. On the same transaction. No, it can't be. And as I've said, please, take advantage of the tax omnibus. For some of us that have issues with maybe Federal Inland Revenue Service, as we know them today, right? You get a good consultant, discuss with them, because it's a thing we have done in the past. You know, some liabilities that are, I don't want to mention figures now, you know, were able to bring it down. But the thing is, you must be able to provide evidence, right? Supplementary evidence for them to accept whatever liability they want to reverse, because it is possible they can reverse it. 1 million can be reversed to 10,000 naira if you have all your papers. So, thank you.
Thank you very much, sir. Okay, the grammar on the art. Yes, I think I saw her first. Thank you.
Thank you. Thank you so much for that lecture. My question is on tax identification number, TIN. And when I heard about it, I discussed with somebody who told me, because I'm a pensioner, that we had been taxed, that we had that number, so we don't even have to open that, to start that number again. But now, I want to ask, as pensioners, will our money to be taxed? Okay, then another thing is that, what of our welfare money? Maybe our children send money to us and so on. Will the money be taxed?
No. Grammar, okay. No. Number one, your pension is not going to be subjected to tax. And I know it has not been, right? So forget, there's not going to be tax on your pension. That's one. Number two is that whenever there is transfer into your account, it's for your upkeep. Right. So it's not an income. It's not thing that you earn, because they need to define it. It's not that you work for the person, right? So it's like gift. It's like that's the thing. That's the name. So it will not be taxed. It won't be taxed at all. Thank you, ma.
Okay, thank you very much, sir. We have taken even more than 3 questions because of our time, and we know that today is Sunday. You have to get back to your houses. We will be calling it a close year for the questions and answer. Can we welcome our lead pastor, Pastor Babatokpa Akinola?